Okay, so at the time of this recording, it would seem that the worst of the crypto market bleeding seems to be over. And for all the major coins, Bitcoin, Ethereum, BNB, Matic, many others, if you look at the 7-day price chart, things look very positive, very green. You see a lot of double-digit weekly percentage growth here. But despite all the charts, despite what all the numbers may say, there's still a sentiment out there in reality, and things still kind of feel bad. However, the historic and most trusted on-chain indicators are telling us that the bleeding has stopped for the most part and that the market's health is now improving. So which indicators are we talking about and what do they imply more importantly? Is the bear market something that's going to drag out for more weeks and more months, or are we now in the next pre-bull run phase? Or hey, is it possible that the crypto market continues to be affected by ongoing inflation and recession news? Stay tuned, guys. We covered this week's on-chain Bitcoin analytics in today's video. Okay, so we're going to be presenting some proof as to why the market is no longer bleeding. But before that, a quick bit of background on all the different types of inflows. So first of all, coin inflows, that's when Bitcoin and Ethereum are sent to an exchange. You guys know this. Why would traders move their coins to exchanges? The answer is very simply because they intend to sell. They're going to be selling those assets on the exchange. Coin inflows represent a very simple idea, but the thing is that they can be a little bit counterintuitive to understand. So we're now going to break this down in the simplest possible way. When the coin inflow into the exchanges is higher, that's a negative for the market, meaning the market will go down. And when the coin outflow from the exchanges is high, that's bullish, meaning the market's going to go up. It's all about who's looking to sell or not sell their assets on the exchanges for a given time, but there's a catch. Because unlike coin inflows, like Bitcoin, for example, to exchanges, stablecoin inflows to the exchanges indicates that a trader is ready to make a trade. And that's because they intend to buy cryptocurrency with that stablecoin, and that is what is happening right now. That's the fortunate part. In just a moment, we're going to show you guys the exact numbers and overview how it correlates historically with price movements in the crypto space. Stablecoins in general are a good indicator of the crypto market's available so-called dry powder. In other words, how much liquid money is available on the sidelines ready to be invested. And it's not just a lot of money. The amount of interest in stablecoins is growing too. But after the Luna UST crash, yes, we need to be careful as far as which stablecoins we're looking and dealing with. Check out our dedicated video highlighting the best of the best stablecoins out there in the space if you've not already. Okay, with that pretext though, let's move on to key indicator number 1, stablecoin addresses. And this number of stablecoin addresses is growing. And it's a key indicator that we have been talking about for a while. And right now it strongly suggests that yes, traders are getting ready to buy. Tether is the undisputed leader in the stablecoin space, and we can see that in late June of this year, 2022, there were 33,000 daily active addresses. But last week, there were 96,000, which represents an almost 200% increase in the number of addresses in just a couple of months. And right now, Tether is adding over 10,000 new addresses per day. And of course, that's very good news because these represent addresses that have USDT in them, which are ready, they're poised to buy something. But coming to USDC, this stablecoin has seen a 100% increase in daily activity from early June, so also just a couple of months ago. USDC has gone from 19,500 daily addresses to 37,000, and it spiked last week at over 67,000 addresses, all waiting and looking to buy. And right now, USDC is adding over 5,000 new addresses per day. This is all really good news because it represents a ton of money that's sitting on the sidelines right now that is ready and willing to invest. It's good news. It indicates buying pressure, of course, which translates into market price pumps, presumably to the upside. But really, the impact of the stablecoin inflows and outflows to and from exchanges itself is going to be what determines how all of this will impact the market movement. I don't think I really have to say it, but yes, this is a bullish indicator right now for Bitcoin on-chain analytics. So in addition to stablecoin addresses, key indicator number 2 is going to be stablecoin exchange inflows. Now, since November 2020, exchange inflows of stablecoins specifically have been on the rise. More stablecoins going to exchanges means more coins are ready to be bought. And this is bullish, of course. The end of June actually saw a big spike in inflows of stablecoins that we think is related to whale buying, as we discussed, by the way, in our video. a couple of weeks ago. Check it out if you've not already. And while this is all good news, there has been a slight observable drop off for July and August. But look, we think seasonality with summer vacations in North America and Europe have a lot to do with this, more than any kind of waning enthusiasm, basically. So in simple words, again, growing stablecoin exchange inflows is another bullish sign. And finally, key indicator number 3 is stablecoin exchange outflows. Now, on stablecoin exchange outflows, we saw a spike in June. That was related to what turned out to be FUD, fear, uncertainty, doubt about KuCoin, and global macro events like monkeypox becoming a public health emergency. That's according to the WHO and the CDC, the Center for Disease Control in the US. But after that spike for the last 6 weeks or so, the weekly average is pretty clear. Exchange outflows are declining sharply. And our patient, the cryptocurrency market, seems to be bleeding less and less. You can see it right here. This liquidity is not going away or crashing out in the form of dollars or euros. It's staying right where it is. No more outflows of blood from this market. And again, with the number of addresses growing steadily, that's just more and more buying power ready and waiting. So all this money in these new addresses is going to put huge buying pressure on BTC and probably ETH especially, and some other big projects stand to benefit as well. So it should come as no surprise, we are interpreting this indicator as very bullish. And finally, just before we wrap up, it's worth mentioning weekly money flows, because one last cool chart for today is the fact that this weekly money flow chart tells us that for the last 5 weeks, money is flowing into crypto. Once again, bullish. Now, this helps show us that the exchange outflows of stablecoins is also bullish. It confirms that they're going to private wallets or for buying purposes. And those coins aren't off-ramping to fiat. So no longer is the market bleeding quite as much as outflows have stopped. And the market is gaining strength due to all the buying power on the sidelines. Again, bullish. Now, among all the stablecoins out there, which one is the winner in terms of USDT, USDC, and BUSD? Well, look, BUSD is well behind the others at $17.8 billion in market value. That's compared to $54 billion and $66 billion for USDC and Tether, respectively. But it's still the number 7 project in all of cryptocurrency. So it's a big boy. Again, check out our video in more detail where we overviewed our favorite stablecoins, their strengths and their weaknesses. Check that one out. A card should be popping up right about now. Okay, so we definitely had some good on-chain analysis news today. Let's sum it all up. The number of stablecoin addresses is growing. That's bullish. The number of new stablecoin addresses is also growing. That's bullish. Exchange outflows represent bullish metrics. Exchange inflows represent bullish metrics. And the weekly money flow into crypto, that's also bullish. So it looks clear to us that the market is in a healthier place than it's been since earlier when this bear market started. Whales are going to keep adding to their positions. It's definitely time to give the market another look if you've not already, and see if you like the price levels for your favorite projects, because for many of them, the fundamentals are equal to what they were previously, if not better. Best of luck, genuinely, if you choose to invest, although never official financial or investment advice. I have to say that, of course, you guys know the drill. If you're still watching this video, be sure to like, subscribe, share, hit the bell to receive notifications. That bell, by the way, just keeps you up to speed, because when we release new content in YouTube form, you're going to get notifications alerting you to every time we publish that new video, if you so choose. So look, we do a lot of time-sensitive stuff. Use it as a tool in your arsenal in this crypto space, in addition to everything else that we recommend. Guys, check out these other couple of videos. They should be popping up here to my left, to my right. Stay safe out there, members of the Altcoin Buzz Army. And as always, we do hope to see you again soon in our next video. Take care.